Okay, guys, thanks for joining us here in the charts. This is the Market Beast, Napoleon Macro, Infamous 5, NASDAQ, S&P 500, the SPY, the S-Dow, and the Dow Jones. We're going to take a sneak peek at the 50 exponential moving average on the weekly. Also pull up our infamous Fibonacci retracement levels to see if everything looks fair. And let's get into it and make it short and sweet, guys. So welcome back, loyal family. Or welcome me back, loyal family. If you're new here, we only explore price action. Welcome in new subscribers. Let's dive into the charts here. Show. So today's February the 16th, 2022. In the previous close, we'll start with the NASDAQ, $14,603.64, slightly negative 0.1% for the day. Okay. All right, ladies and gentlemen. We have a post, guys. Stick around for that. We got a post coming out, so let everyone know what's going on. Here's a chart. The NASDAQ is still below the red line. If you're new, we just simply measure the previous low to the previous high to get our Fibonacci retracement levels. The white line is the 0.618. The blue line is the 0.786. And the red line is the 0.886. My secret was a secret line, but now everyone knows. We have a X on the NASDAQ because it has failed to maintain support above those Fibonacci retracement levels. So until the NASDAQ can actually close a weekly candle above the 0.886, which is $14,657 and about 11 cents, it will continue to have one X out of our infamous 5. So that's one that we do not have. Let's move it on over to the S&P 500. Previous close, $4,475.02. Slightly positive close, 0.09% for the day. Okay. All right, guys. So the S&P 500 actually has a check mark in my book because it is still above the blue line, which is the 0.786. 4,000, please take notes, $4,395.19. Remember, we're looking at active weekly candles, okay? Watch out for that rug pull, okay? This active weekly candle still has about 1 day and 17 hours to fully develop. Okay, so it's the same thing that it did on a previous weekly candle right here, the red candle. They pulled that rug on the last day on the close. So just understand that as long as the markets that we're going over, the levels that we're going over right now, the 0.786, as long as the weekly candles close above those levels, and preferably a green weekly candle, everything looks just fine. But if they pull the rugs, then that's just what the markets are doing, guys. The bears are here, the sellers are here, and that's just something that we have to live with, right? All right, let's move it on over to the SPY. The previous close, $446.60. Slightly positive close, 0.11% for the day. Okay. All right, there's a check mark for the SPY in my book. Of course, it is above the blue line at 0.786, and that is precisely $437. I think we actually got a comment saying, hey, man, you might want to redo your video there. I actually had to measure my readjust the Fibonacci retracement levels. I think it was something like it was some weird numbers, guys. So I just had to realign my levels. This was the only one that I actually didn't have it, set properly, was the SPY. So I do apologize for that. But the level is going to be, the 0.786 is $437 and precisely 94 cents. I think on the previous videos we were saying 441. So I apologize for that, guys. Let's move it on over to the Dow Jones. The previous close, $34,934.28. Slightly negative 0.1% for today. Okay. All right. So it's still above the blue line. Blue line is going to be $34,642.00. Remember, active weekly candle. Watch out for that rug pull. You guys, all the levels that we're going over, we're giving you guys one level on each asset. And what you want to do is make sure that it's actually closing above these levels, with the exception of the last one here, the S-Dow. We want to make sure that the S-Dow is actually closing below 29.50. Okay, so if it's closing below, that's good. Previous close of the S-Dow, $28.67. Slightly positive close, 0.2% for the day. Okay. So obviously there's a check mark for the S-Dow. So we do have 4 out of 5 check marks for our infamous 5. So that leads me to believe that the market players who are holding up the uptrend are trying the best, guys, that they can to keep things intact here. But let's wait for these weekly candles to close. Let's see if they're going to pull the rug as they did on the previous weekly candle. If they do, again, you just have to live with that, guys. I don't make the rules, right? These are the markets. So you guys have all the levels. You guys have the time frame, the duration that the weekly candles are going to continue to develop. 1 day, 17 hours. All right. And that's pretty much all I have for you guys. So in summary, I think everything looks fine as long as the the NASDAQ can get above that 14.6. The the S&P 500 and the SPY and the Dow Jones can stay above the 0.786 levels on the Fibonacci retracement levels. Everything looks fair to me, actually. So I'll be waiting to see how it's actually going to close, guys. Okay. And yeah, if they stay above the 0.786s, then yeah, the market is just in preparation to move higher, at least attempt to, right? All right, so that's the end of this video. Hopefully you guys enjoyed that, and hopefully you guys have the summarization of everything. 4 out of 5 check marks. So far, the markets look fair. It's attempting to continue the overall trend. I think we also mentioned we're looking at the 50 exponential very briefly. So if we just kind of scan through this is the Dow Jones weekly candles. It's still above the 50 exponential moving average. This is the NASDAQ. It is below the 50 exponential moving average. Yeah, the NASDAQ is, I don't know, it's NASDAQ kind of weird. All right, the S&P 500 is above the 50 exponential, looking fair. SPY is above the 50 exponential moving average on the weekly. Yeah, it looks fair to me, guys. It looks like they're just trying to set up to move the markets higher. But now you have all the details, Fibonacci retracement level and the 50 exponential on the weekly. And that's all I have for you, wonderful folks. So hopefully you guys enjoyed that. So if you don't mind supporting the channel before you go, but simply leaving an appropriate thumb. I know this has been kind of the longest delay that we've ever had in posting the videos. We have huge changes going on, guys. I appreciate your patience. What we're going to do is only the infamous 5 moving forward and Bitcoin only. So yeah, the individual stocks, we're probably not going to be doing those for some time, guys. Please always leave those requests in the comment section. I do appreciate the requests. But moving forward, we're going to be taking a look at the infamous 5 and Bitcoin only. All right. But of course, this is kind of abrupt, so I'm definitely going to put out a post if you guys are subscribed. We're going to take all kind of like, I guess, 3 of the your best stock requests. And if we've made those videos before, then we'll do an update. We're probably not going to do any new stocks right now, guys, just because of how fragile the markets are setting up right now. I think it's very important that the markets have my undivided attention to truly see the direction here, the trajectory here in the short to midterm. And I think it's extremely important for me to stay focused on this for you guys. All right, so hopefully you guys would appreciate that. Again, that is the end of the video. Hopefully you guys enjoyed that. If you don't mind supporting the channel before you go, by simply leaving an appropriate thumb, I would appreciate it below the video. Also leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your support. If you guys are new, we also explore the alternative markets. If you're into Bitcoin, you can kindly subscribe with us, hit the bell, and we'll send it out to you momentarily. I'd like to take this opportunity to thank you all for your time and your patience. Remember, guys, always have a strategy. Keep that positive energy flowing. We'll talk soon, and bye for now.